Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Actually, it's the week ahead. We're going to talk about gold, silver, and the Fed. Remember, if you haven't yet signed on for our Switch On newsletter, be sure to do so. I'm preparing it right now. This will be delivered to your email inbox before the beginning of the UK session. So I always like to game plan on Monday. I think Monday's a great time to sit back, see what's coming the week ahead. We put that out in a newsletter and a video on the Switch Markets YouTube channel. So if you want some hot markets, this week I'm covering the dollar index, silver, gold, probably a little bit of copper, and maybe some Bitcoin. I'm going to talk a lot about the things that we see coming our way in the next 5 days on the market. The biggest event's going to be the Fed meeting, but I have to tell you, the civil unrest and really the weekend news cycle here in the United States, to think that that's not playing into some of our metals valuations is naive. Remember, anytime you see metals absolutely booming, There's a couple of reasons for that. One of the biggest ones is that it is a safe haven asset, all of them. Essentially, even copper, we could say, could become a safe haven. But right now we're seeing silver explode, gold explode. There's a lot of reasons for the silver run. A lot of it has to do with the shortage of physical silver being the London depositories. That's a big deal because London sort of is the clearinghouse. I've been to London more than once. No, just once. I've been to London once and Canary Wharf once. I guess they're the same place, but Canary Wharf's where all the banks are. And then London proper, I guess that's where all the restaurants and shops are. So we'll talk a little bit about that. I'm not going to get too deep into it because there's no way to audit these things. Nobody really knows how much physical silver is in London. They just know there's not enough. There's also been some new restrictions placed by China for 2026 about exporting silver. Supposedly, no more silver exports are coming out of China. That's interesting as well. It doesn't matter because the big picture is silver right now is at $117. It's absolutely exploded. We've got some trade ideas, some trade updates that we have to give you. I got a question right out of the gate on gold. We're going to talk about gold. We're going to talk about why the gold trade idea was a no trade idea, and that's because we had a gap. And anytime you have a gap in the market, especially over a weekend, I mean, it's one of those where you don't want to say I told you so, but man, we gave a very, very stern, serious talk on Friday about the risks of going home short metals, and we got the big gap open on gold up above 5,000 and sort of left our entry point out in the cold. So I definitely want to talk about that. I think we have an opportunity potentially to make some money this week. I am a little bit timid, though. I'm very rarely timid in the markets, but what I see happening here sort of defies a little bit of my logic. We've got the VIX going up and stocks are going up. We've got the U.S. dollar essentially crashing. I think we've nailed that call. And then we're only getting started with the U.S. dollar selling off this year. DXY is right around 97. That's going to be at 92. I can see that coming. So we're going to talk a little bit about the DXY as well. Also, your Forex majors, any majors that you'd like to look at, really any markets that you want to look at, I'm more than happy to do so. This is sort of a preparation Monday. We're going to talk Monday psychology, really getting the week off and going on the right foot. I like to dip a toe and sort of not necessarily limp into the trading week, but I like to go very easy because you can make big mistakes on Mondays, and those are tough to erase. And right now, I mean, honestly, I'm just sort of taken aback. I'm watching the strength in the metals markets, and it really defies all expectations. I don't care who out there is the biggest silver bug in the world, the biggest gold bug in the world. Nobody had this. Nobody had this. So a lot of folks have said, oh, silver at 150, silver at 200, 300. Yeah, but you didn't have a $15 gain today. You didn't have that. I mean, silver's up 13.53%, and it's rallying. It's one of the biggest intraday moves I think I've ever seen from a precious metal. It's absolutely huge. And what's unique about this type of bullish move, this type of action, is that a 13% move typically comes on the downside of the market. That's when you have a market panic and everybody runs for the door. That's where you get the big moves, the big sell-offs, the big crashes. It's the opposite today for silver. So if you were in silver and you made a bunch of money on this trade and bailed at 100, we talked to a trader last week and essentially made a great trade. Do not kick yourself for missing the last $17 of this. Call, you're thinking, oh, man, I need to stick. I need to stay in. I need to stay in. I need to stay in. I go, man, you just made huge returns. As soon as you exit the trade, it's over. You don't sit around going, oh, no, what did I do? I should have stayed. You can't think of it like that. Think of the money you made. We're going to get pullback buys in gold and silver. I have no doubt in my mind we're going to get those. And I'm going to show you where those may be. But to be really honest with you right now, if you're holding shorts in the metals markets, it's probably the end of your trading career. It probably is. So be very, very careful shorting metals. This is probably the market event that I've seen in the last several months. I mean, this is a big one. This is a big one. So good to see everybody back in the trading room. It's all about metals today. That's a fact. T. Marina, happy Monday. Happy Monday, T. How are you doing? Hello, Shane. It was a good day today. Managed to claw back losses from last week from the gold move. Man, I would honestly, when I was trading with the 7V Bar Trading Group, when I first started out, if I would have taken a significant loss shorting gold or silver, I'd have been fired. I'd have been put on timeout for probably several weeks. I would have said, come back. That's what would have been told. I mean, they would have just looked at me and said, come back when you get a brain. And so I would have hung out and traded demo and done research for a month until I got my account back. shorting the metals right now, I mean, I just am not interested. Over in the How to Trade community, good to see Andrea Garwal. Good to see Andrea. Welcome. Tuku, Bobby, Bob, Lita, Ralph H. Good to see everybody back in the room. Dave, good to see you. Dave, let me see. Should have always wins. Happy Monday. Happy Monday depends on if you woke up on the wrong side of the bullion market, that's for sure. Let's go ahead and just get started with what we need to cover, and it's all about metals today. I mean, there's no question about it. This was the trade idea that we put out last week, early last week. This was the Sell America trade. Does anybody remember the Sell America trade? Yeah, how higher equities since the Sell America trade. You're trending higher again today with U.S. stocks and equities, but what we have developing is just an explosive situation in the bullion market. So what was our idea? Our idea was to short right in front of 5,000. The idea was to short 92s and look for about a $15 pop. There was a lot of reasons for that. Number one, I figured that we were going to get some resistance at 5,000. I'm still convinced you're going to trade 5,000, but I'm not telling anybody to short right now with the idea that we're going to trade back down to 5. I'm not even remotely saying that. But we were looking at 92s, and this is why you don't just go short and hold anything over the weekend. Take a look at this. A gap at 5,000 developed beautifully right here. Here's your gold spot. Here's your U.S. dollar 4-hour chart. There's your close right there on the 23rd of January. What was your closing value? 49.87. And then your open was what? Your open yesterday afternoon for business, what was it? 5,015. It skipped our entry. It absolutely skipped our entry. So that for me is a no trade. That is a real unfortunate thing because I high probability that we were going to get a little bit of compression right in front of 5,000. And when price just flat skips the entire region, we're just left going, well, we had good discipline. We had a good order. We had a good game plan. Just didn't come our way. And that's life in the markets. You don't ever sit around going, oh, man, what if I only would have got that? Well, we might have lost. Who knows? But the bottom line is this. The opening week gap was above 5,000. You saw the low right there was about 5,003. Gap up opened at, 15? And then you pulled back to 3, and then you're off to the races by another $100. I mean, it's astonishing what's happening in the bullion market. There's no question about it. So when I'm looking at something like a gap, there's basically 3 rules of commodities trading. And this goes back to Stadelmeyer's work back in the 1980s with the market profile mentality, motif, system, strategy, whatever you want to call it. It was more of a thesis and a theorem rather than really a trading strategy. But the idea behind market profile and the idea behind volume analysis is that price points get debated. You have buyers, you have sellers. You have a market, you have price. Buyers and sellers collide typically at every price, and whoever wins gets the price movement. This is price discovery. If I show up and I say, hey, here's my phone. You want to buy my phone for $50? And you say, no, I'll give you $45. And I say, fine, I'll give it to you for $47.50. We shake hands. There's the deal. That's price discovery. That's understanding what an asset's worth. Well, in the markets, we do this on just a hyperinflated scale. I mean, we're debating the price of gold, in fractions of a penny, right? Well, that's just fine. That's fine. We can do that. There's enough volume in these markets to get that done. But when you don't trade a price point like a 5,000, typically that leaves a void. It's sort of like reading a book, and then all of a sudden chapter 8's gone. You're like, oh, what the hell happened to chapter 8? Well, eventually you're going to have to find out where chapter 8 is and read it before we actually talk about how the book ends. For me, I look at a gap of 5,000 and I think of my three commodity rules, commodity trading rules. Gaps get filled, and gaps get filled. What the idea behind market profile is. And this was, I don't know if the guy won an economic Nobel or whatever they call that. There's a special award they give him. But the idea is very simple. We trade for a while at a price point, and then we jump. And then we trade and debate that price point, and then we jump. And we sort of trend. We trend up. We trend down. We establish horizontal areas of fair value, and then we move to another value area. That's what it's all about. That's what the market is. That is it. So when we see something like a 5,000, nobody traded 5,000. It was never put to the world, hey, what's $5,000 gold worth to you? Are you a trader at 5,000? Are you a buyer or a seller? What are you? That never happened. That was potentially an all-time high at 5,000. It was an area that was never debated. We went off the board on Friday. We came in Monday, and now you've got a valuation up around 5,089. Now, the volatility is staggering. It is staggering. I wouldn't be shocked to see brokers start going belly up in this environment. I think that gap up at 5,000, that cost somebody their house. Somebody was the wrong way on this market. They missed Friday's stream. They went home short gold, and it probably blew out their savings. Now, for me, I looked at that and I said, that's why you don't go home over the weekend short. That's prima facie evidence. We're talking about a close on Friday, a close of 49.8750. And you had an open on Monday of 5,015. That's a $23 gap. Now, if you're playing with any size at all, you can't weather a $23 storm, especially if you're selling maybe whole lots or multiple lots. Man, that's one that just breaks the bank. So looking at that, we say, okay, 5,000. Shane, are they going to trade 5,000 again? I would be willing to wager on it. Well, can I go short right now? And I go, phew. How do you take a short right now? Very difficult. There's only a couple ways that I would say take a short. And if you're serious about it, and there's a lot of you out there, there's a lot of traders out there that are going, okay, I'm going to short this thing and get the reversion. You could be right. I can show you a trade right now that everybody in the world is going to be executing. They really will be. If you're a rookie trader, if you're a rookie retail trader, you're probably looking at and considering this trade. Okay, let's go ahead and sell the market right now. Okay, we like the reversion back down to 5,000, right? Where do you think everybody's stop is? There's no doubt about it where it is. The high right there is 5,000 or 51.11. You know that's where the stop losses are. What typically happens in a market before you get your true move? Okay, we moved up above 5,100, and now we're getting the selling. What probably happens? You're probably going to get run up here before you get the big reversal. Could the big reversal come right now? It looks like it's coming. I mean, we're coming off in a big way, right? In my view, you can't really hold shorts. So if you're serious about shorting it, that's one way to approach it. You could stop yourself out up above that all-time high and look for some bearish pressure. There's enough volatility in here where you're probably going to get paid off something. But if you're wrong and the price decides it's going to bounce and trend against you again for the 58th time and through the last 3 months, you're probably going to lose. I would view any shorts on the precious metals market as being excessively, extremely high risk. We've got to see some confirmation up here. We've got to have a way to manage our risk without getting absolutely destroyed taking a gold short. So what could that possibly look like? Well, I mean, I always lean on the 920 EMA when I'm talking positions. All right, so let's go ahead and talk a position here. Let's go ahead and hit gold. What do you got going on a 4-hour chart? You don't have anything. And you can see right here, this is a prima facie evidence. Believe me, your broker, a lot of these brokers' historical charts won't show that gap. It was a gap. If you want absolute confirmation of that, here's your futures contract. You gapped higher on the open. It was 100% a gap. Now, a lot of the charts are going to run that gap together. Believe me, it was a gap. I watched it happen. All right, so right there, 4-hour chart. So what would we be doing here if we were thinking about maybe taking a sell? You're going to need to see some sort of crossover. So you're looking for the 9 to cross under the 20, essentially a 30-minute chart. Could you, in fact, get this trade cooking? Probably. But I would damn sure wait for a crossover. I wouldn't just take the sell thinking that, okay, it's coming off now. There's no evidence of that. There's no evidence of that. None whatsoever. None whatsoever. So be very careful. If you're going to take shorts in this market, you take it with a very structured approach. You don't let these things bleed against you. The last thing you want to do is start backpedaling thinking you have enough money to ride this turbulence out because you don't. Gold could go to $6,000 and it could happen in 3 days. It just, believe me, the markets can stay irrational longer than you can stay solvent. You don't have enough money to take that trade. Few do. All right. That being said, how could we trade gold? Well, I really don't mind if you're looking at a 30-minute chart and you want to take a crossover trade. You know exactly where your stop loss has to be up above that swing high, and then you're taking the shot. You're taking the big shot probably back down to 5,000, something like that. I admire your ambition, and I'm pulling for you. I'm not interested. But at least if you have that signal, that 9 EMA crosses under the 20, and you're going to fire your guns to the short, I don't have a problem with it because you know where you have to get out. And that's all we can ever ask. That's all we can ever ask out of our trade management. For me, a higher probability trade is going to be to step back on the daily and say, okay, what's going on here? Now notice, you'll see right here, this is Forex.com. They're not showing you the gap that is present. Let's go ahead and take a look at maybe Oanda. Oanda shows that gap. Very important that you recognize that gap. Very important, very important. Spike low right there, spike high. Upper extreme today is right up around 511, 5,111. Spike low right there is what? 45.36. That's a tremendous range. What are we looking for? Spike low to a spike high. Where's your 38% at? 48.90. In a perfect world, you'd love to see something like this. Maybe get that rally right up in there, right up around 52.80, somewhere in there. Even down here, we could get with the program. This is pretty good stuff. See, there's your gap right back there. I told you that horror story last Friday. I told you about the purse gold. Boom, happens again. That's not a coincidence. It's Friday trading. Understand, Fridays can either really make you as a trader or they can break you. Don't let them break you. Don't let them break you. I mean, pardon my French, but to lose a bunch of money on a gap open like that's bullshit. You cannot let that happen. You cannot let that happen. You're too good. You're too good of a trader as a veteran trader to ever let that happen. If you watch one of these live streams, you already have the experience to not let that happen. You don't let it happen. So the flip side of that is, Shane, what if I'm long? Can I go home long on Friday? And I'd say, if you're going to do it, you do it to the long side right now. I don't recommend it because you will see a correction. You will show up one of these Sundays and it will be gap down and it'll screw the whole world over. Be careful, be careful, be careful. But pardon my French, I just have to tell you how I feel about it. And these markets are just, there's so much money at play. There's so much money. And to lose a stack of money on an open where you don't even have a chance, come on. Spike low right here in a 4-hour. Spike low, spike high. What do you think? That's very nice. 62% right down there at 49.80. Maybe right around my gap area. I'm probably a bidder from 5,000. There's no probables about it. That would be the bid. What we want to see, though, is if we could get the back end of that golden zone right up in there, maybe something like that. Oof. That makes that area right there an extremely strong trade in one of those that we are going to be targeting towards the end of the week or maybe even as early as tomorrow. Good stuff here in the gold market. I can't wait to trade it. Haven't traded it yet? Absolutely. So you definitely want to be watching for those things. We got some questions out there in YouTube land. A bunch of questions. Okay, great. Let me see. Lebo, I used to trade metals, but now I trade energies and indices. Nothing wrong with that. Metals are crazy. Like I still remember the significant loss I took on an intraday basis last August. That one hurt. But there's a lot of money flying around in metals right now, and that's essentially where the big guys are playing. That really is. Let me see. Peace. What's up, Jason? How you doing? Let me see. T. Marina Shane, I noticed my Oanda overnight fees are higher for short positions than longs. Do you know why that? Why and or what makes up those differences in cost? Yeah, those are your swap fees, T. And that's essentially what the brokerage is going to assign, and it has to do with your exchange rate. So if you're looking at gold to the U.S. dollar and you're actually holding that position, you're probably losing value in the U.S. dollar as opposed to gold. So gold's going up and the dollar's going down. So essentially they're going to bill you for that difference. I know it's not very clear. It's called swap rates. We do have a swap rate calculator over at Switch Markets if you want to figure out your swap fees. So something like this. We can just go right out and take a look at it. You go over here, you go into resources, or actually tools, might be view all trading tools. Yeah, it was right there. It's under lot size calculator, but something like that, Forex profit. It's called a swap calculator. I just made a video for it, actually. Yeah, right there, Forex swap calculator. So if you were looking at something like this, you would choose your instrument. I don't know, what do you hold, an XAUUSD? Typically, it's for currencies. But what they're doing is they're billing you to try to make up for the difference between the U.S. dollar losing a little bit of steam against gold, which I understand it's denominated. The gold's denominated in dollars, but what the broker's doing is they're just adding in their little secret sauce. This is what it's going to cost you to hold a gold position. So it's something like that. As far as that, well, that's not just gold. I noticed my Oanda overnight fees are higher for short positions than for longs, and that's just the exchange rate. That's the exchange rate, T. So, like, let's say you wanted to hold Euro USD. Okay, so you're looking at Euro USD, and this is over at Switch, so this is a good reference for you. Deposit currency be USD lot size. Let's say you're putting on one lot size, number of nights. Let's say you want to hold it one night. Calculate your swap long is going to be minus 7.16, and your swap short's 4.18, and it has to do right there. A swap known as rollover is the interest paid, so essentially that's the interest you're paying for holding one currency against another. If it's positive, essentially it's a carry trade. that means that you're taking a position against a currency looking to make a higher interest rate. So in this instance, it would be the difference between the interest rate on the euro and the interest rate on the dollar. It's just a swap fee. Cost of doing business. When it comes to metals, it's a little trickier than that, but that's the basic idea, T. Hope that helps. Let me see. Why the silver boom? Yeah, we're going to talk silver here in just a second. Couple of reasons, but a good question. We're going to silver next. Let me see. Nico, how do you tell with such confidence where the stops reside? Excuse my rookie question. Well, it's a good question, Nico. The real basic answer, and the one that women and men would give you on YouTube, they would try to play the guru role and say, well, I've been doing this for so long and I just know where they're at. For me, it's always a question of what's obvious, what's really obvious. When we look at that swing high here in gold, 4-hour chart, whatever time frame you want to go to, you can go to a 5-minute chart. Everybody can see that. That's the high. So when you start talking about, okay, what's up there? And I would say, well, we know that there's shorts dug in up there. The price action shows us that. Price is sort of bearish here a little bit, sort of rotating around. We challenged up here, got around to fresh shorts. Challenged it again, got around to fresh shorts. So what conclusion can we draw? That's sort of your textbook liquidity sweep up there. That's what the smart money concept traders are going to tell you. Stop losses are right up here. Anybody that's short using this as their stop loss, using this high as sort of their barometer for their trade, saying, okay, well, we rallied here, I'm going to go short. Where would you have to stop yourself out at? Stop yourself out right up above that all-time high, step back, reevaluate, maybe let it breathe for a little bit, but then get out. So I guess what I'm saying is in the futures market, we have a pretty good idea exactly where the stops reside because, we can do something like this. We could pull up our gold chart, and then we could use our handy-dandy TPOs. Okay, we could pull a time price opportunity, which is your volume, right? Okay, so there's your point of control. Point of control in gold futures is where? And this is just an example. Point of control is right there. Okay, what is it? Sort of where we're trading right now, 50.85. How much volume was up here? Not much. Not much. So if the bulk of this action's right here, do we think that we're net long or short? You're probably, day traders, probably short, especially during the U.S. session. So you got to figure if there's a lot of shorts in this volume right here, and there's bidders in here too. I'm not saying that there isn't. The top of your value area is right up here. Bottom of your value area is here. The idea is that the shorts would get pushed out right up in here. Idea is that nobody's going to help them up here. Now, maybe they do, maybe they don't, but we do know one thing. Once we get up above that daily high, life gets tough. If you're holding shorts, you're probably going to get squeezed out of there. That's the basic idea. It gets really complex. We start talking about the volume stuff. We'll save that for another time, but it's a great question, Nico. Let's see. Eyes hazy. How do I trade silver? I don't see any pullbacks in the near future. Yeah, we're going to go ahead and trade silver here in just a second. No sound? Shad, you got no sound? I think everybody can hear me. Sorry, Shad. I think we can, I don't know. I'm showing I've got sound. I'm hot. I'm ready to go. So maybe it's you. I don't know. We'll check that out, that calc. Okay, so what is a credit when it's a negative balance? It's just the opposite. So it just has to do with the interest rates, T. Sometimes you carry a position, you're paid for it. Other times you're not. When you're getting paid for your interest rate and you have a positive swap fee, that's known as a carry trade. So something to think about there. Okay, we've got a lot of questions on silver. And I think my audio is good. If my audio is not good, I would have heard more about it. So probably just got to turn it up a little bit, Shad, or maybe unmute it. Definitely showing that we're hot. Okay, why the silver boom? A lot of different reasons. The first thing that we're going to talk about here, this is multifaceted. Why the silver boom? There's 3 reasons in my view. Number 1 is the fundamentals. We're going to cover a lot of those fundamentals in the newsletter. Be sure to sign up for it. There's basically 2 fundamentals right now that are being attributed for the big boom, the big bullish boom in silver. Tina, good to see you, Tina. Welcome. 2 things on the fundamental side. Number 1, you've got supposedly a big-time shortage in the London depositories. If you do have a big-time shortage in the London depositories, that means that if somebody shows up to take physical delivery for silver, which has been happening more as these AI data centers are being built, They're really falling back on silver, copper to be superconductors and conductors, right? So there's a demand for that, a manufacturing demand for that. And when there's a big demand, people show up to the market like major players, the Googles of the world, the Metas of the world. They say, okay, we need a bunch of silver. They go to the exchange, they buy it for the intent of taking physical delivery. And when there's not enough of it to meet those needs, what happens then? A couple of things happen. Number one, the market goes crazy because somebody's going to snap up all the supply on hand. The other thing is, and this is a trend that we've seen recently, is people like Google, Meta, I think even Amazon was in these data center businesses. They were going right to the silver mines and trying to buy supply directly from the wholesaler. In this instance, would be silver miners. Given that scenario, the silver never goes to the exchange. So if I'm Google and I'm Meta and I show up and there's a great big silver mine, let's say there was a lot of silver taken out of this region back in the day. Let's say they go up to a place like Anaconda and they say, okay, you've got some silver. It's not a huge mine, but we want to buy all of your supply for the next 10 years. Give us a price. That means that silver, that physical silver, is not going to go to the exchange, which means your London depository all of a sudden isn't going to have as much silver to start fulfilling orders of people that are taking physical delivery. So what's that going to do? It's going to put artificial pressure, or at least it's very real pressure, but at least short-term, intermediate-term pressure on the price of silver to the bull because there's not enough. That idea of scarcity, the concept of scarcity, that's the first market driver. That's very real right now. Feel free to Google it, ChatGPT it, research it. There is a shortage of silver in the London depositories, and that's the hub for metals really worldwide, both gold and silver, at least at the moment. Number two, beginning in 2026, China they put severe export restrictions on silver. So all of a sudden, there's no real silver coming out of China hitting the global markets. That also contributes to that idea of scarcity. How about this? And this is sort of what's interesting. This is what we're going to cover a lot in the newsletter and in the video, the Hot Picks video this week. What about the U.S. dollar? U.S. dollar is tanking right now. We're off about 0.5% with the DXY. This is our DXY chart. Always remember this. As the dollar goes down, your other things are typically going to go up. Your risk assets, your stocks are going to go up. Crypto, probably going to be pretty strong as well. Metals are a huge beneficiary. Think about what's happening when a dollar loses its power. Basically, everything else is more attractive than holding dollars. So the investment money is flowing out of the dollar, and it's flowing pretty much everywhere else. That's why you can see that we have a VIX, a volatility index that's flat, and you're starting to see a significant rally here for a Monday on Wall Street. So stocks are up, metals are up, energies are down. I think this is the new world. This is what we're going to see in 2026. And it's all predicated upon the dollar falling. So you ask me, why is there a silver boom? The physical end of it, definitely. But everybody's known that. It's no surprise today. What about, what happened here? I can't move my mouse. Hang on a second. All right, that still works. 1 minute. All right, we're back here. This mouse still isn't working. I'm going to have to go ahead and rig something here very briefly. So just give me a minute. I'll get back. Okay, we're back. Technology, huh? It's a lot of fun, especially when it gets cold up here in Dillon. It's about 0 degrees here. It's 25 now, but it was 0 earlier. Typically, all the electronics go crazy. In any case, what we've got right here is we've got a dovish dollar, right? So we've got a dovish dollar. Prices are coming off. Values and pretty much everything else are going up. So if that is the case, then we can attribute our second market driver to a weak dollar. So we've got scarcity and a weak dollar. How about the third? What do you think the third is? Geopolitics this week, it's all about what's happening in the United States domestically. Weekend news cycle, not very great. Had another shooting in Minneapolis. Widespread riots, hotels are getting trashed, people are in the streets. The threat of the Insurrection Act is very real at this point. And what this will do, I mean, this is the Insurrection Act evoked by, we're not thinking that it's going to be by the end of this month, but perhaps by March or June or something like that. That's interesting. That tells us a couple of things. Number one, the civil unrest here in the United States is only going to get worse, especially this year. It is an election year, so you're going to see a lot of this stuff. We saw it in 2020. There's no question about it here in the States. This is what's going to happen this year, and it all revolves around immigration policies and some things that are happening from a social level. That's going to boost the risk profile. When risk gets boosted, people fly into safe havens. What else? What's another piece of this puzzle? Will there be another U.S. government shutdown by January 31st? They're saying that 79% is sort of the litmus test here. So we're thinking that it's going to be later this week, and what the Democrats are going to do is they're going to shut the government down again. They just reopened for a few months there after the big fall shutdown. They're going to shut it down again. They're going to demand that they take funding away from the ICE. They don't have the votes to do it, so the Republicans will be forced to make a stand there and try to override this shutdown. But they're going to shut it down again, and it's going to throw the markets into chaos because your budget still isn't really finalized for 2026. They don't really know what they're going to do. They just know it's an election year for the midterms, and they're going to shut the government down. That's more uncertainty. So you've got civil unrest. You've got a government shutdown. What else do you have? You've got an election, which is, this is January 26th. It feels like it was just January 2nd. This election's going to be here before we know it. And as the year moves on, this is going to become more and more and more important. So right now, what do you have? Balance of power in the midterms. Democrats sweep. They're saying there's a 38% chance of that. 37, excuse me. Which party will win the House of Representatives? The Democratic Party is widely expected to win the House. And then what do you have there? Which party will win the Senate? This is what's interesting. And this is the one that will be fascinating to watch this as we move forward in time throughout this trading year. Basically, what you will see if the Democrats do win the House is you will see impeachment proceedings launched, and Trump will be impeached for a third time. That's guaranteed. That's guaranteed for next year. So a lot of things are going to happen when the Republicans lose the House, or if that prediction stands. You're going to have basically gridlock in Congress. You're not going to get really any further down the line on the agenda, either with immigration or spending, and that's going to bring everything to a screeching halt. Believe me, that factors into things like safe havens. It factors into everything, because how are you going to really restore any sort of, economic prowess, at least regarding the Trump administration's game plan, when you can't get the votes to do anything? I mean, if they could delay, they would have problems getting the Fed chairman confirmed, or FOMC members confirmed. It will be a fight on every little thing, with the idea being of just stalling out everything until the 2028 elections. And that looks like it's exactly what's going to happen here. So that would be the third part of the equation for silver. I mean, right now you've got physical scarcity. All right, you do have that. You've got a weaker dollar. There's no question, in my view, I think we've nailed the dollar. I would be very surprised to see the DXY holding above 92 for the rest of the year. And then also you've got the civil unrest here in the United States and the election. Those three things, you're drawing people to safe havens. Silver, very, very attractive right now. And here it is. I mean, here's our breakdown for it. So we had the cup with handle. I'm going to keep going back to that. Incredible breakout. Really, the signal bid was somewhere down around 85, probably this daily close. And man, look at that. It's been an absolutely huge run up. And that's even just for late retail traders that got in on it. Buying pullbacks. No question about it. Now, right now, there are sellers up here making money. No real reason to say they're not. 117.75 is the top today. You're already down to 112. So people that are taking short positions, short scalps, doing very well. Now, this market has absolutely exploded for me. It's relatively simple. You're just buying pullbacks. You're trying to get in on any pullback you really can. Spike low, that's a beautiful place to begin your Fibonacci sequences. 21st of January, sort of a little 2% pullback, 1.57. 3 big days, plus 3%. Plus 7.5%, plus 9%. That's what we call just an explosion and a light show to the top side. There is absolutely no way that you get that kind of movement without some serious bullish appetite. And I think it all plays into it. Safe haven appeal, weaker dollar, scarcity. You add it all up, and it's a perfect storm. There's a couple other things that we need to realize from a technical perspective that did happen in this silver market. Number one, a lot of retail shorts got forced out over 100. And go back to last week. Watch some of the live streams. We covered silver a lot. And the big question was, Shane, are you going to sell in front of 100? And I said, well, you should be okay to take a scalp, but you don't want to hold anything. And honestly, selling in front of 100 was not good. I mean, this thing's absolutely just exploded. The volume flew into the market right over the key level, and since then it's just been momentum. People have piled onto the momentum. So I think 125 is as good a level as any to go to as a top side target. I think 125, 150, 175 at this rate, you could really be looking at $200 silver relatively soon. You could be. I don't believe that, but I think that it's definitely possible. I'm willing to admit that it's possible. So if you're on a pullback here, 120, 107 and a quarter, oh yeah. This down here I love. 62% pullback right around 100. We could see a swift pullback to 100 and then just jam northward to 125. I would love something like that. If I was holding a position in silver, it would be long or nothing. I wouldn't be holding shorts just because you're fighting. I mean, you're swimming up a river. You're swimming upriver. The current is up. I mean, you got to make sure that you get with the pressure. Sure, you've sold off quite a bit today. That's a function of the volatility. The reason why you're selling off is profit taking, short scalps, maybe some momentum, but you're still extremely bullish. Don't lose sight of that. And the other thing to remember is that you've got a spread of 755, 635. That's astounding. It's crazy almost. Compression, no compression around 100. Break, pullback zone right at 100. Very much. Let's take a look at a 4-hour chart and see what we've got here. And there it is. Sellers are showing up. You're off 4% in the last, 30 minutes? That's an incredible run. So what would something like this look like? Spike low right there is where you began. There's your current wave. Low. That was back on the 22nd of January. Since then, the 4 hours just been in a stiff uptrend and a huge bullish break. And now the pullback's on. What do you think about 38%? 110? 110 even, maybe just a shade over 110. I like it. I like it a lot. Any chance really to bid this thing just gives you an incredible opportunity to get in. But once again, this would be a trade. This wouldn't be okay, I'm buying 110 and I'm waiting for 125. I don't think you can do that with this much volatility. More than likely, you're going to get stopped out before the getting gets good. So to me, 110, I probably would be looking for a return, maybe up there to 111, 111.50. Remember how silver's priced. It's much more granular than gold. I mean, we're dealing in fractions of a cent. And the reason why is because silver for the longest time just did not move. And now it's wide open. Fibonacci level to the bull, probably a pretty good trade. You just got to be careful with this one. You don't let this one get away from you either. If it's not there, you just have to move on. But I would love a bid right there from 110, right above it. 62%, 105, more than likely 105 and a quarter maybe, something like that. Key level of 100, yeah. I mean, it's there. So I want to bid. You want to bid. How would you bid? Something like this. Get your paper trader up. Let's go ahead and I don't even know what the heck's going on here. Yeah, do this one. Go to trade. What would you be doing here? Order, buy, limit. From where? I would be dialed in pretty tough right there, maybe right around 110, 110.30 maybe, something like that. That'd give you a potential opportunity to grab that Fibonacci level if you wanted it. High probability trade. High probability that you get a bounce off of that. The tough part's going to be being patient and getting it. It's really all there is to it now. You're just waiting. As far as what could you do on a 30-minute chart, wouldn't even go any lower than the 4 hour. You can see exactly how stiff this is. Volume spikes, right? So there's your top 117.75, and then there's the big sell-off, right? Do we get an opportunity down here? More than likely, yes. Just got to wait a little bit, but it's coming our way. It might come our way right now while we're on this stream. Trading about 112.50. Do we have anything on the 30-minute that could even help us? What's the U.S. session looking like? Opening bell, ding, ding. Not really. You could extend down to this trough low right after durable goods. We haven't even talked durable goods orders. You'll notice that 62% worked perfectly. Maybe right around 110.44. Maybe that would be sort of an area that you want to get around. 110.50, 110.55. The biggest thing that I would recommend is if you do take the bid, if it's not there, you have to get out. There's too much volatility in this market to wait. You got to make sure that you're very, very careful with what you're doing. This right here, I would call this a high probability trade. 110, fully expect to get a bounce. All right, maybe we'll get it right now. So what do we have here? So what makes this? There's no point even watching the trading dome. Right here, let's just pull out the telestrator and show you exactly how to execute. This zone right here is what we're looking for. That's what we're betting on. We're betting that there's going to be bidders here. Why are we doing that? Because the uptrend is significant, right? So the uptrend's significant. Get rid of that. The uptrend is stiff. Now, intraday, the last hour, we are coming off in a big, big way, but still you have to really like the long side of this market. This is prima facie evidence that markets, when they flush, all of your retail longs today are getting flushed. Now, when we take a trade in here, you don't necessarily want to pick this position saying, okay, we're going from 110 up to 125. We don't know how this is going to pan out. We just know there's a lot of action in there and the market's coming our way right now. On 111 and a quarter, this is absolutely looking beautiful. So my take profit probably would be right up in here. I'd be looking for maybe 111.20. That's a pretty good trade. On the downside, what we're looking for, a stop loss, is we're going to let this thing develop right in this zone. My line in the sand has got to be right around 110 even, something like that. And if it does, in fact, blow past us, then we've got to be smart enough to get out of the way. So let's take this right down to, say, a 1-minute chart and see what price is looking like. Essentially, this is our trade. And this would be real similar to how I would execute this in real time. I mean, I'm looking at this saying, okay, what level do I want? I say, okay, this is an aggressive entry. It's an aggressive entry right up there, right around 110.55. We know we've got our happy zone, our big time, that 4-hour support zone is right around 110. My 30-minute current wave, 78% retracements, right around 110. So I want this area right in here needs to react in a very, very bullish fashion. We're only going to give it maybe a minute, maybe two. And if, in fact, this market craters, then we're going to bail. That's all there is to it. Now, right there, I mean, you could see the bidders are significant. They're there. It's just a question of where do we find them. We're just sending out probes. Where do we find them? And I would love for this trade to go live. It would be just a great instructional moment. And you're looking at what? Profit targets right up there around 111.21. This would probably be this would be a very, very high probability trade for me. Watching this, so you're looking for what, about 75 cents, risking somewhere around 50 cents. So this would be a 1 to 1.5 risk versus reward. That's if you get it. I think we're going to get it, but the bidders are in the vicinity. So right now, 11:42 my time. It's 1:42 Eastern. Okay, here it comes. We're going to be dancing here in a second. I want positive, immediate price action. If I don't get it, we're going to rip the Band-Aid off and get out. You can't afford to hold a position. Even if you're right to the long side, you can't afford to hold it because the volatility is too big. The ranges are too big. That's all there is to it. So let's wait. Let's give this another minute or two and see if we get a little bit of love here. Getting in on this entry point with this much action is also going to be sort of a bit of a trick, especially with a spread that big, so go ahead and give it another couple of seconds. I'm not going to sit here and watch this all day, but you can definitely see where the level is. Interesting. Nice sideway trade. Remember, we're not trying to call the bottom of this market. We're just looking for a bit of, like that bounce right there was very nice. That's sort of what we need. We could definitely do that, or we could wait. I'm going to go ahead and turn to a different market. But right here, you can see the compression setting up in the 1 minute. They're clearly bidders here. I want it right now. I don't want to sit around any longer. I want it right now. If, in fact, you don't want to take this without any confirmation, I would be watching this for a 1 minute hammer to show up somewhere down here. That would be a safer way to play it, but it looks to me like we're going to get left out. That's trading. That's absolutely trading. So I'll keep an eye on it. We got some more questions here in the live chat. Let me see. Tina, lost track of my time. Just came back to England. Well, I've been going all over the globe, Tina. That's tough to keep those time zones straight. Very difficult. I remember getting back from Greece. I went to sleep for, it felt like 30 hours almost. I shut it down at like 5 in the afternoon and got up at 8 the next morning. Let me see. Ice Hazy, all the billionaires are rushing to build AI data centers, so it makes sense. Absolutely for silver, 100%. Nico, with the Minnesota situation escalating, could Trump be out before midterms? No. Trump's not going anywhere. No, they're not even talking about that. I mean, the violence is palpable, though. I mean, If you're talking about actually overthrowing the government, that's not going to happen. If that does happen, then all bets are off. The U.S. dollar goes pretty much worthless overnight, and then you'll just see your financial markets globally crash. So I don't think that you're going to see that, no. Let me see. Lise, what is this? What chart is this for? That was for silver, spot silver, XAGUSD, and that was on the Oanda data feed. It looks like we're just going to miss out on that trade. That's too bad. Let me see. Gold is acting the same way. Let me see. Eli, what are the Bollinger Bands for? Bollinger Bands are how I judge volatility. So very simple. When the Bollinger Bands are tight and parallel, there's no volatility, and you're just getting rotation. When the Bollinger Bands are wide open, then you've got a live market. Sort of when the alligator's mouth is open or when it's closed, you don't really want to trade too much when it's closed. But when it's open, that's when you want to trade. That's when you can get in on the action. Good question, Eli. Let me see. Eyes hazy. There are some big buyers sweeping liquidity on both metals simultaneously. Yeah, you're starting to really see the correlations at this point flex. I mean, look, we missed our trade. That's trading. You know, I guess we could have been more aggressive. The problem is you got to draw that line in the sand somewhere. So 110.73, so the play would have been to buy 110.75s. Well, we were at 110.50s. I mean, it's just a guessing game. You do the best you can. Should we have got that trade? Yeah, we should have got it. Did we get it? Nope, we didn't. Back to the drawing board. Is that level still good at this point? Yeah, I would say so. You like to hit those the first time through, though. It makes life so easy. Makes life so easy. Let me see. Ralph H. over in the How to Trade community. Good to see you, Ralph. Hey, Shane, what will happen to the dollar when the Fed chairman is replaced? Brings us to our next point. Our next point is going to be our interest rate expectations. Right now, I fully expect the U.S. dollar to continue trending down once Powell is replaced. You can see right here, we've got 2 days until our FOMC live engagement. I'll have that for you live. 97% chance that you're going to hold interest rates exactly where they're at. And I think that's 100% true. I really do. I don't see Jay Powell cutting interest rates, and a lot of it has to do with him being under investigation by the DOJ. Now, I could be completely wrong. There could be a surprise in here where, you know, maybe there's a back channel deal going where they say, hey, listen, Powell, cut interest rates and we'll drop the charges. Could be. That seems to be the world we're living in. There's a lot of people pulling a lot of levers. So for me, I think Jay Powell is going to be defiant till the bitter end. I think that maybe he gets one rate cut this year, but I doubt it. I think he's going to keep rates where they're at, probably going into the next Fed chairman. Now at that point, more than likely you're going to see some seriously aggressive rate cuts. That's why right now we're looking at the end of the year odds for the 9th of December. I know it's a long ways, but we got to look ahead, and you'll notice that this distribution starting to skew a little bit further to the left. Still way too conservative. I think we end up over in here somewhere. And right now, my personal views are only being priced at about a 7% chance in the market. So we're looking at probably 2 rate cuts by the end of the year. That's what people are thinking. I don't think that's the case. I think that this right here, to answer your question, Ralph, this right here, if we start getting over into here, you will see the dollar plunge. Now, the dollar plunging is going to check a lot of boxes for the administration. It's going to send prices higher, but it's going to send equities prices higher. Your markets are going to boom. Assets are going to boom. And that's what that seems to be exactly what the administration wants. You're going to be able to show a lot of economic growth with a devalued dollar, but whether you're actually getting anywhere, whether it's making conditions better for anybody, that remains to be seen because inflation is going to remain high. There's no way that it can't. There's no way that it can't. So to answer your question, Ralph, when the new Fed chairman comes in, I'm looking for big rate cuts right away. And if they're not going to do that, then they won't get the job. All right, a couple more things we need to cover here. I didn't really do much. This thing's on the fritz again. Yeah, I've got a short here. Hang on a second. Yeah, what we have is static electricity builds up, and it happens when it gets this cold outside. So my connections are sort of off. All right, my mouse is back. All right. Here we go. In any case, a trade update. I do want to go ahead and touch on this one, and then we'll sort of wrap this stream up. We covered a lot with a lot of food for thought today for a Monday, but Bitcoin. We were looking at about 85 and a quarter, somewhere down in there, and pretty darn good trade. We just didn't quite get elected. You can see our monthly chart. We pulled off very, very close. Our monthly low now is right around 86. So we missed it by about $75. Some 750. We were very, very close on this one. We just didn't quite get elected. So I'm still watching it. This should have been a pretty easy clean. You'll notice our entry points right down here somewhere. And what did we have? We had a low, and then we bounced up and sort of hit our take profit, but we just didn't quite get elected. So I'm still watching that Bitcoin. I think that's a very good level. The bidders are there. We just got to wait and see how it unfolds. Here's the schedule for week 4. Durable goods and T-bills came through today. Tomorrow, CB consumer confidence. Wednesday's the BOC and the Fed rate decision. I will have it live, FOMC live. We'll have all the coverage for you there on Wednesday. We'll also trade it live as well. We've also got Thursday initial jobless claims. I wouldn't worry too much about that. We've got a live trading webinar scheduled for Thursday, and we're going to talk about how to trade metals. We're going to talk about how to trade gold, silver, and copper on that Switch Markets live webinar series. Be sure to check that out. We'll have the link in the newsletter for you, so you can actually just turn your notifications on and don't miss that no matter where you're watching us. And then also Friday, US PPI. PPI is interesting because it's still out on sort of a disjointed schedule due to last fall's government shutdown. So we're watching PPI closely. I think you're going to have an opportunity there probably to make some pretty good trades later in the week. I'm sort of skeptical about what we're seeing right now. I really am, but you just can't deny what's happening in the markets. You can't deny it, and it's really, really explosive, especially in metals. So as far as our fundamentals for today, durable goods came in at 5.3%, well above expectations. That's a preliminary figure. That shows that economic growth is really there. I don't believe any of these numbers coming out of last fall. I think that the books are suspect at best because of the government shutdown. So we're going to wait and see how some of these trends play out. The 3 and 6 month T-bill auctions, you'll notice that yields went down yet again. Yields on the 3 month went down, and then yields on the 6 month sort of ticked a little bit higher. As far as I'm concerned, that's sort of a non-starter. We're still seeing expectations for more dovish policy coming in sooner rather than later. I still say that it's going to come about. You'll see the rate cuts really kick off about June. And then as far as where we're at with our durable goods numbers, you can see right in here, you got a pretty good cross-section of data over the last year that shows you it's just been really random. So really a significant build there. We may come back with a negative figure next month. It's really difficult to tell. We just don't know. So, all right, everybody, that was a good look at your metals markets. We really unpacked them. As far as our silver trade goes, we just missed it. That's exactly the one that we wanted. Now we're trading up around 112.15, coming back our way a little bit of intraday selling. I didn't cover copper. Let's go ahead and cover copper real fast. Copper's interesting. 4-hour bid was right there, the 23rd of January. You got that crossover, had an opportunity potentially to hold the bids. That was one of those trades that's panned out to be pretty good. I mean, we're right up around 6. We sort of broke copper down last week. Not nearly as attractive as silver and gold, not nearly the volumes, but you can't really argue with the price action. So right up there at 607. This area might potentially be an area of resistance, but it looks to me like the bidders are just involved in metals across the board. As far as copper, what do you really have today on as far as the daily time frame goes? Not much. There was your big move, 2.37%. On Friday. Today, you're up about another 0.75%. So it's good stuff. It's a pretty good move, but it's just not even remotely close to what we're seeing in silver. That's up 9%. Gold's up 2%. WTI crude's off a little bit. We'll cover crude oil tomorrow. I want to give that a chance to simmer. We may actually have a trade idea in that regard. But right now, we're just looking at pullbacks. We're looking at pullback zones. One last thing that I will mention, and it may be worth referring back to last Friday's live stream. When we broke down the relationship between the gold futures and the gold spot, a little bit of a clue that we were in potentially for some sort of move. The way that those two contracts came in and the basis was really eliminated, the difference between the futures price and the spot price, that really wasn't a factor, and you very, very rarely see that. And right now, take a look at what we have developing in the futures market. Gold futures, February gold futures, $5,076. Spot gold, $5,080. Very rarely will you see that sort of dynamic where the futures prices are just a little bit lower than the spot, especially with metals. Typically, futures contracts, as they become deferred, are sort of at a discount to the current front month contracts, but the relationship between the futures and the spot has been absolutely insane with gold. It's been crazy. So if you wanted to judge it according to that, then maybe we see that pullback. I love the pullback to 5,000. I'm a bidder from 5,000, no question. But it's a trade. It's not an investment. And that's a big difference. Big difference. Okay, let me see. Nico, nothing on Forex. Well, we covered the U.S. dollar. So, I could pull any Forex pair you want. I'll do one more market if you guys want. As far as commodities, though, metals today are what we needed to cover. That's what's rocking and rolling. As far as the Forex goes, there's a lot in there, but what do you want to look at? I'll tell you what. We'll look at, I'm not going to look at any majors. Let's look at, this is the one that beat us earlier this year. Take a look at this. This was sort of our short trade. We were looking to get short. Look at what happened to the Aussie CAD. Absolute explosion. Pull back right to that zone, and we are off to the races. Why do you think? Gold, metals. Australian dollar is a commodity dollar. It depends on metals pricing. That's prima facie evidence. This right here is an absolute fantastic triangle. It's already gone. But right here, so there would be sort of your run, and then here's your rotate. Run, rotate, break. Sort of self-explanatory how to trade it. You're just looking for pullbacks at this point. First pullback zone 94. Interesting. We're trading 94.97, so 94.15. That would be a very good one. As far as maybe a 4-hour pullback, extremely bullish, and it just is. Look at Australian dollar gaps up because metals gapped up. Intraday scalp. What do you think? 94.88. Clearly 95 is the 10,000 pound elephant in the room. Something to think about there. All right, one more. Eli, Great Britain pound, Japanese yen. The Great Britain pound, Japanese yen is interesting. It's always interesting. The guppy's always open for business. Sell it. No, I'm just kidding. Let's take a look at some technicals. Spike high, spike low. I like that a lot right there. You have a defined trend, clearly. Bearish. Very nice zone right there. 211.50. Big round number. I like that. You've also got the 13-period EMA right there on a 4-hour, right around 211.69. This area right here could be pretty good to the short. Let's go ahead and wipe the short-term stuff off. Take a look at where we're at on a daily. Weekly. What did we get on the weekly? Looks like we got a bid. Spike low, spike high. So, game plan will be simple. Short time frames, you could definitely play the sell, but that zone right there is a very attractive. 38%, 208.85. You've also got that 13-period EMA right there, 13-week EMA right at 208.68. That's a big-time zone right in here. So I'd be watching that support zone relatively closely if we do get an opportunity potentially to trade it. The real question is what happens with these markets as we roll forward this week. The volatility is just really heavy to open. Great trading day, but a tough trading day. There was lots of FOMO out there today. Lots of FOMO in the metal markets. A lot of people rushing in, afraid they were going to miss out on their fortunes, and it really cost them. So watch out for this whipsaw price action. Anytime things get crazy for me, I fall back on my long-term technicals and look to make my decisions based on the broader picture and all the evidence at our disposal. So for me, I'm looking at that Great Britain pound, Japanese yen. Yeah, you could probably sell. You could probably sell on a 4-hour time frame, just more of a modest type of a profit target, essentially. On the longer time frames, like the weekly, 208.85, 209 even. Probably maybe a pretty good late week trade. Who knows? Might get that during the Fed. Might be a great pair to trade during the Fed. All depends. This is the modern day gold rush. I tell you what, there's been a lot of people made a lot of money from the silver market. Crazy. Silver, something else. All right, everybody, I want to thank you for joining me today. We went on long enough. I hope we answered all your questions. If you have any questions at all, though, any more questions, head on over to How to Trade Trading Room. Sign up for a free account. Send me a private message, and I will get back to you directly. As far as tomorrow goes, we will have a trade ID out a little bit later today, and then we'll also have that weekly newsletter. Check that out over at Switch Markets. We'll give you sort of the rundown of what to expect. Nico, I still don't understand your top-down process. You're framing the Great Britain Japanese yen bearish when the monthly is rallying to the upside, sort of like the EG we checked out last week. It's very simple, Nico. On a short time frame, I don't care if you're long or short. On longer time frames, that tells us what's happening in the market. So for the Great Britain pound Japanese yen, it's bullish. But it's also important to understand that for the past 4 weeks, it's been sort of rotational right around that point of control is 212. So what I'm saying is if you're going to trade that thing on a 4-hour chart, a 30-minute chart, or a 5-minute chart, and your technicals line up to sell, you're free to sell it. What I'm saying is there's also a hell of a support zone down there around 208.85 where I would much rather wait and buy that thing with the macro trend. Very, very different things. Intraday trading, of course you can go against the trends if you want to. The key is just having a stop out point. But the longer term trading, right now I probably on a weekly time frame, I wouldn't tell you to sell the Great Britain pound Japanese yen. I wouldn't even be looking at it. Because my stop loss would have to be up over those highs, those spike highs at 215-ish, selling 211s for maybe a shot at 208.85. It doesn't work for me. So the idea here, Nico, is very simple. We go through multiple time frames. I can be bearish on a short time frame and bullish on a longer time frame. What makes those trades different is your risk versus rewards, your stop losses, maybe your sizing. I would size my weekly trades on my weekly support zones much, much higher than I would size on a 5-minute support zone. Stay fluid with your thinking. Don't cut your thinking off. Don't cut it off. Say, hey, listen, just because, I've got a position long going and I'm confident in the long side of this market, maybe you're looking at a 1-minute chart or 5-minute. You can still sell that. You can still grab it. These guys, these are the folks that I learned from. The pit traders were the guys that were like, yeah, I would take a position in the morning, but I would scalp all day long. So the position trades were the big runners they were looking to make the huge money on and the get-rich trades, but they would still scalp inside the pit all day long. So a guy would be open. He'd say, okay, I'm going to go ahead and open 10, in WTI crude or something, and then come back and on a different account, just sit there and short, just sit there and scalp inside of the pit all day long. We can do the same things on our charts and on our electronic devices. It's just all about time frame. It's just about time frame. It's about, hey, okay, listen, I've got a ton of money long silver. Okay, that's great, but I still think we can get in and scalp this thing on like a 500 tick chart or something. There is nothing that says you can't do that. Now, we don't typically talk about that stuff because people get confused. Well, Shane, are you bearish or bullish? I go, it's not that simple. It's not that simple. I have no problem selling a 4-hour chart there on the Great Britain pound Japanese yen. Difference is my stop loss is going to be a lot tighter. My position size is going to be a little bit smaller. But I know what I really would like to do, and I would like to buy that 38% weekly right around 208.85 that comes together with my 13-period EMA at 208.68. That's what I really want. That's what I really want for Christmas. But maybe we can make a few bucks in the meantime. Something to think about there, Nico. All right, let's see. Buy low, sell high. Yeah, that's what it's all about. It doesn't matter the time frame. All right, guys, I'm going to go ahead and sign off. If you have any other questions, be sure to reach out and ask me over at How to Trade. Be careful. It's Fed week. Very important that we understand that anything can happen. There's going to be a lot in the news. It's your guess is as good as mine what's going to happen next. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See you.